Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Massar and Tim Stenovec from Bloomberg Radio.
Well, the world's biggest bond market boosted bets that the Fed will indeed slash rates again next month after inline inflation data. Shorter dated treasuries outperforming. You saw that yield on 2-year notes dropping from the highest since July. Swap traders boosted to about 80%, maybe even more. The probability that the Fed will cut rates again on December 18th. Bottom line, it's a different trade than it was a couple days ago.
Yeah, it certainly is. That's the backdrop for Bloomberg's conversation with Federal Reserve at Bank of Minneapolis President Neel Kashkari. Leading that chat, Bloomberg News international economics and policy correspondent Michael McKee, who joins us here in the Bloomberg Businessweek studio. Mike, first up, the CPI print today, in line, as Carol mentioned, with Wall Street estimates. As you dug into the details, anything in there that stood out?
I think the fact that there were many categories that did see price increases, and some of the ones that have been problems before are problems again, like used cars. And housing is still not going down. It actually went up in price. The two areas that we did see some improvement in were food, up just 0.1%, the same as last month, and gasoline, which was down, and we all know that. The other thing that stood out to me was I'm sure Kamala Harris wishes this report had come out before the presidential election because the price of eggs went down 6.7%. And she'd been criticized heavily for the price of eggs.
I don't know if that would have made a difference, Mike.
I don't think the election came down to just that. But I see what you're doing. Well, wait a minute. So when it comes to inflation, I do feel like, we're hearing some mixed messages or some, you get a lot of stories on the Bloomberg that there are people concerned about inflation reigniting, and especially thinking about a Trump administration and its pro-growth policies.
Well, there's two things to watch. One is that what you're talking about there with the Trump administration and the tariffs and tax policies. St. Louis Fed President Alberto Musalem was just asked about those, and he said, I can't comment on anything that the new administration is going to do, but if you look at a textbook, it will tell you that tariffs raise prices and can create inflation. And Neel Kashkari had roughly the same views today. So the Fed is going to be watching that. But the thing that has really got, for the moment, Wall Street's attention and some economists' attention is we've been making progress on inflation, but are we going to be stuck where we are with headline inflation at about 2.4%? Not 2%, and certainly core inflation well above that right now on a CPI basis, 3.3%. Now, those numbers are lower for the PCE that the Fed uses for its target, but it's still a question of, have we stalled out? And would that keep the Fed from cutting rates further because they need to keep the pressure on to keep pushing inflation lower?
Hey, we're going to talk about your conversation with Neel Kashkari a little more in just a few minutes, but I want you to weigh in on this Department of Government Efficiency that's getting a lot of attention right now. Elon Musk, Vivek Ramaswamy are going to be co-heads of this department. Musk coming out on the X platform saying he wants this running counter of how your tax dollars are wasted. Although previous presidencies and previous administrations haven't called this Doge, this has been tried before.
Dogecoins didn't exist.
They didn't exist
earlier, and
this has been tried.
I suspect this acronym comes from maybe a commercial point of view on Elon Musk's side, but this is definitely not new. You go back to Theodore Roosevelt had a commission proposing new authority, followed by William Howard Taft, who also had a commission on government efficiency that actually proposed and was enacted the first presidential budget. Presidents didn't submit budgets before, and so presidents were kind of in the driver's seat until the 1974 Budget Act created Congress's responsibility to pass a budget, which they never do. So, you can put that on the list. But you go all the way up through basically the George H.W. Bush administration. And literally, Dwight Eisenhower had one, Franklin Roosevelt had two, while he had 1.5 because Harry Truman took over the other half. And there was a commission under Hoover, there was a commission under Coolidge. These commissions just get appointed by presidents, and they all promise the same thing. We're going to make government work better for the American people. We're going to cut regulations. We're going to streamline activity. And they all come up with, several hundred ideas, and many of them get adopted, and yet here we are again. So you wonder how much success they can actually have.
Yeah, I guess so, right? Like it's a huge task. I think a lot of people talk about, though, inefficiencies in government. So you do wonder.
But it's not just getting rid of these so-called bureaucrats. It's not just firing people, because that's actually a very small portion.
Well, that's a different effort too on the part of the Trump administration. He wants to be able to fire government officials who aren't loyal to him, and so that's this whole Schedule F issue that's going to come up, where he tries to move these people from protected civil service jobs into fire at will jobs.
But you do wonder what programs ultimately get cut, right?
Exactly.
And that's the thing, whether it's Medicare, whether it's Social Security.
The most recent, Barack Obama,
which I think voters actually voted on.
Barack Obama tried to remake the Commerce Department and separate out some things from there, and Congress said no.
All right, so TBD, right? Wait and see what happens here. Let's go back to Neel Kashkari, president of the Federal Reserve Bank of Minneapolis. You did talk to him earlier. Let's just share with everybody some of the information that came out of the interview that Mike did with the surveillance team earlier today.
I'm not seeing a lot of upside risk yet. We don't know what's going to get enacted. I'm not seeing a lot of upside risk that inflation is going to take off from here. The bigger risk that I'd be concerned about on the inflation front is just if we're landing at around the 2.5% level instead of back down to 2% level. I think that those risks existed before the election, and I think that there continues to be uncertainty now, and we need to just take our time, let the data come to us, and let that guide us.
All right, so Neel Kashkari speaking with Mike and the surveillance team earlier this morning on radio and TV. So there is more data before the next Fed meeting, right? So a rate move, not a guarantee, despite what traders are saying. We know this can bounce around a little bit.
Yeah, I wouldn't put a lot of stock in what you're seeing in the futures markets right now, because we do get a lot of data. We get another CPI report, we get a PCE inflation report, we get a couple of retail sales reports, and we get the jobs report for the month of November. And all those things will weigh on the administration. But you see Kashkari saying what we were just talking about, that his worry is that we get stuck. And that might call for the Fed to stay in one place. Massar, who was mentioned, was just speaking, said exactly the same thing. Gradual cuts if inflation keeps falling is the way he put it. And Jeffrey Schmidt from Kansas City also saying there's uncertainty about how far rates should fall because there's uncertainty about where inflation is going. And I think you're going to hear this pretty much from every Fed official over the next couple of weeks. We don't know, but don't count on it one way or another. Don't rule it out, but don't count on it.
It's the way it goes. All right, Michael McKee, thank you so much. International economics and policy correspondent here at Bloomberg News. Catch his full conversation with Neel Kashkari. Check it out on the Bloomberg. All right, everybody. So from the economy and Fed policy to those who will be helping to shape some of the new policy initiatives in the Trump administration, that's exactly where we go right now.
This as the president-elect continues to name names for top cabinet posts and other advisory roles, and as Mr. Trump goes to Washington, meeting today with President Biden and top members of the GOP. Back with our Washington Roundup, Bloomberg News political reporter Tyler Kendall live for us at the White House. Tyler, President Biden and President-elect Trump meeting earlier today at the White House, that meeting wrapping up. What do we know about that, what they talked about, how it went down?
Yeah, hey, Tim. So White House Press Secretary Karine Jean-Pierre coming out just moments ago calling this meeting substantive, saying that there was this exchange of ideas and that they hit on national security, domestic policies, as well as a to-do list for Congress in the coming months, including averting a government shutdown when funding runs out on December 20th, as well as passing some more supplemental disaster relief funding for Americans. But the press secretary also honed in on this idea that the meeting was largely symbolic, right? It was to ensure this peaceful transfer of power important to point out that 4 years ago, then President Trump did not extend the same tradition to then President-elect Biden. However, the two did appear cordial today in brief remarks off the top, both committing to making this transition as smooth as possible. I'd also quickly add that as we are getting these headlines from the White House press briefing, it does appear that the two did speak about Ukraine and supplemental assistance to Ukraine. This confirms some of our earlier speculations as we were looking at clues on what the two could be talking about. Because as we look at what President Biden is pushing for in these final months of his administration, we know that his national security advisor, Jake Sullivan, has said that they will push the Trump transition team to make sure that that security assistance for Ukraine plays out. But of course, he has now Vice President-elect J.D. Vance, one of the staunchest opponents of Ukraine aid in his Oval Office. So that's one of the storylines that we're going to be covering closely.
Yeah, I'm glad Tyler brought up the idea of what happened 4 years ago.
Very different.
At the White House. Extremely different. I mean, think about where we were just a week after the election 4 years ago. The two actually never met at the White House 4 years ago. President Obama did extend that same courtesy to then President-elect Trump 8 years ago, and he visited the White House.
Yeah, right. Like, so it wasn't kind of business as usual, certainly last time around. Hey, one thing we also want to ask you, Tyler, is Republicans, for the first time in 18 years, elected someone other than Mitch McConnell to lead them today. That person is South Dakota Senator John Thune. Tell us a little bit about those developments coming out of D.C. as well.
Yeah, definitely, Carol. So not necessarily a surprise, Senator John Thune, one of the top contenders for this race against another John, Senator John Cornyn, a Republican from Texas. Also, Senator Rick Scott, a Republican from Florida, who appeared to be backed by some of the more conservative MAGA Republicans for that spot. Thune ultimately ended up winning in a second round ballot. He's been the number 2 in the Senate, a staunch ally of Senator Mitch McConnell, who, as you mentioned, is ending a historic 18 run as the party's leadership. But he is going to be absolutely critical. In remarks after winning, he said that he will work with now President-elect Donald Trump, because as you both know, working with the Senate is going to be so critical for this incoming president, both for his agenda, but also for some of his cabinet confirmation. There are two areas I'm watching for when it comes to Senator Thune. One is his position on tariffs. He's previously criticized Trump's proposed tariff across the board policy, warning about inflationary effects. And the second is, again, to bring it back to this idea of Ukraine aid, considering this was a particular area of tension with McConnell and some of his more conservative members of the party. So those are two of the areas I'm watching to see how those shake out as his term begins.
The president-elect didn't really come out and endorse anybody for that leadership position in the Senate, Tyler, but Elon Musk certainly did. And there were a lot of Trump allies who were saying Rick Scott is the person to choose. How should we look at that fact that Scott didn't get picked as sort of a rebuke of, or at least some resistance to, what Trump wants in the new Senate?
Right. Well, I would focus on Senator Thune's track record in the Senate. He has won the admiration and respect from many of his colleagues, particularly since he has served as this number 2 to McConnell for so long. And he had been campaigning for this early and often. Meanwhile, Senator Rick Scott hadn't launched this bid. So we knew, for many months that Thune was going to be vying for this position. But Rick Scott, for example, was in a tight Senate race down in Florida and then kind of launched this sort of bid. It's going to be absolutely critical for the Trump administration to try to keep a coalition together. We had Congressman Brendan Boyle on Balance of Power yesterday. He's a Democrat from Pennsylvania. When we asked him about the future of governing with this incoming White House, he said that he's watching for if the Republicans can keep their conference in order, since the most recent years have showed us that infighting in the Republican Party has really hurt getting Republican legislation through. I would just quickly add that this morning, when Trump did go to the Hill, it did appear that he backed House Speaker Mike Johnson. That's going to be another critical ally for getting Republican legislation and agenda items over the finish line.
And then, of course, there is Elon and Vivek, which was, I feel like when we read in this morning, Tyler, that was the story that was kind of top of mind in terms of President-elect Trump's appointments or, additional advisory council, if you will. The president does seem to be moving, though, very fast and furious when it comes to these appointments and these nominees.
Yep, definitely. And particularly on this Department of Government Efficiency, I would just say quickly, there are two big outstanding questions here, right? One, how is this going to work in practice? Trump has said that it will be outside of the government. So would that be some sort of a panel that works with the OMB, the Office of Management and Budget, to give its recommendations? And then second, how is it going to do its work? You were speaking about this earlier with Mike McKee. The federal government spent $6.75 trillion last fiscal year. Musk came out in that Madison Square Garden speech just ahead of the election saying that he wants to cut $2 trillion. But the vast majority of government spending is healthcare, Social Security, defense, and veterans benefits. So there is this concern that some of those more popular but also politically fraught initiatives like Social Security, Medicare, and Medicaid could be at risk. But also, as you mentioned, Musk has pledged to make this a more transparent process.
I do have one last question, 30 seconds. Going back to what Tim mentioned about John Thune. I mean, it does look like he is willing to go to battle with Donald Trump. Is he there to carry out the president-elect's mandate, or is he willing to kind of go to toe-to-toe with him? Just quickly.
Right. So in his remarks afterwards, he did say that he was willing to work with him. I think you're referencing a prior rift after 2021, after January 6th, and making sure that that election was certified in the way that it should have been. But John Thune has said that he will be there for the rank and file, even adding some of Donald Trump's priorities in his speech afterwards, including border funding and immigration. All
right, good stuff. Hey, listen, Tyler, thank you so much. In and around D.C., Tyler Kendall. She is Bloomberg News political reporter joining us there from the White House.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
All right, folks, we're staying with news out of D.C. In the days after the election, Donald Trump and Elon Musk, well, they seem to be riding the world's most intense contact high. So writes our own Max Chafkin. Musk is effectively camped out with Trump's inner circle at Mar-a-Lago. He shows up in family photos. He joins Trump's calls with world leaders. Perhaps that's what you get when you spend over $100 million, $132 million at least, into the president-elect's campaign. So let's get to it. This is the Bloomberg Big Take story, deemed by our editors as a must-read story. It is reported out by Bloomberg's Max Chafkin and Dana Hull. Max is Bloomberg Businessweek correspondent, contributor to the Elon Inc. podcast. Max is also author of The Contrarian, Peter Thiel, and Silicon Valley's Pursuit of Power. Max joining us here in studio. I mean, we've all been asking kind of what is Elon going to do in this job? What can he do? And what does it mean kind of as being part of this Trump inner circle?
Well, I mean, last night Trump announced something that he had teased repeatedly on the campaign trail, something that Musk had talked about, this idea that Musk would be an advisor in the streamlining of government. And there's even a catchy name for this. This is the Department of Government Efficiency. It's not a department in the sort of normal sense, and it's also unclear like how efficient is this thing going to be when Elon Musk has a co-chair, Vivek Ramaswamy. That said,
right. Do you know what Tim's been saying? Go ahead.
I've been saying that it's like it's supposed to be efficient. Why are there two of them?
All right, this is a joke that Democrats have pointed out and critics are gonna seize on, and I think the challenge here is that many of the things that Elon Musk has talked about wanting to do, cutting $2 trillion from the federal budget, or even if you start talking about some of these very specific things that he personally thinks is kind of dumb or useless, all of that's going to be politically difficult. When you're talking about gigantic cuts, $2 trillion, that's going to mean Congress, it's going to mean hard choices about important federal programs like Social Security that lots and lots of Republicans, that majority in the House is going to be very, very narrow. The midterm is going to be
it's going to mean, are you looking at the midterms?
And
right,
so
exactly.
Again, that's going to be hard. But when you even talk about the sort of smaller things like, some defense thing, a lot of this stuff is politically charged, right? You have senators, congresspeople in various states who care about the jobs in those states. Right. And Trump is going to need to govern, and he's going to need Republicans in the House and Senate to do that, even though Republicans control those branches. But seeing the selection of John Thune as Speaker, again, that's kind of a bit of a rebuke to Elon and kind of the hard right part of this coalition. They had wanted Rick Scott. So there's going to be a lot of challenges here. Of course, there are ways that Elon Musk can get paid, even so.
One thing we should note is Elon actually accompanied the president-elect to Washington this morning. He was with lawmakers earlier, too. They gave him a standing ovation in addition to giving the president-elect a standing ovation. So certainly gives an idea how he's seen in the Republican Party right now. Max, the China part of Elon Musk's story, I keep coming back to because he's got this very close relationship that I wonder if it could be, in the words of like Jeff Bezos, a complexifier when it comes to Elon Musk's relationship with Donald Trump, because he wants to do business in China and he wants to do business easily in China.
It's not just that he wants to do business in China. He really needs to do business in China. Tesla, unless there is a dramatic change in strategy, Tesla needs its China business. There's a massive factory. It's the world's largest market for electric vehicles. Tesla is trying really hard to compete there, and Elon Musk has made that a big part of his strategy. Now, I think two things are possible. One is if tensions between the U.S. and China were to heat up further, there are ways that Elon Musk could de-emphasize his reliance on China. The biggest one would be, focusing more on robo-taxis, which he's starting to do. The other thing is, Donald Trump ran as a peacemaker, a negotiator. Yes, he's going to, put tariffs, he says. But remember, the last time, lots of companies got carve-outs, were able to negotiate their own, basically ways to avoid paying those tariffs. So you could imagine Elon Musk trying to find, get some exceptions carved out for important industrial companies such as, Tesla Motors, a company that he, owns a huge stake in. And the other thing is, compared to Joe Biden, I think Trump is arguably not as, despite the fact that the rhetoric is very hawkish, Biden was also quite hawkish on China. So I'm not sure that this represents such a huge complexifier, but though it is certainly going to be a challenge. And it's also, of course, an opportunity for political opponents of Donald Trump on both the right and the left to seize on, because you can talk tough on China, but then when one of your partners, has this enormous Chinese factory, has a good close relationship with the Chinese Communist Party, that's gonna lead to criticism.
I keep thinking about conflicts of interest in this administration. Here you have Elon advising Donald Trump in terms of the efficiency of government. You have a company that does a lot, has business contracts, right, SpaceX, with the government. You talked about how, Elon can get paid. I mean, his stock is already up 30% from the election. I mean, it just seems kind of complicated in terms of the connections here.
Absolutely. I mean, the thing is, if you were watching the campaign, what you understand is the conflicts of interest are the point. I mean, Trump talked about that as an advantage. That was sold as an advantage, and it's going to continue to be sold as an advantage. Elon Musk, he's not just some egghead. He really understands business. In fact, he runs a couple of important businesses. Trump talked about, on the campaign trail, just essentially ordering up rockets from Elon Musk. So I think that they believe, Donald Trump, his advisors, Elon Musk, that basically voters and the Republican Party are not going to mind that he's that important. But I think that really remains to be seen. And what happened during the last Trump presidency is that the controversy started to bubble up, right? And then it became harder and harder for people who were kind of in Elon Musk's position to stay in that inner circle. And that's exactly what happened to Elon Musk, by the way, in 2017. Amid all this controversy, it was after the sort of Muslim bans and Trump left the Paris Climate Accords, Elon Musk backed away. He had been on another advisory panel. So I think that is one thing. What's different this time around, and I think what's going to put pressure on Donald Trump and actually put pressure on moderating forces within the Republican Party, is that Elon has all this money that he's going to spend on politics. Yesterday, he was tweeting that he's going to play in the midterm, including the primaries. And if you read between the lines, what he's saying is, if you don't go along with my agenda, Senate Republicans, Congress people, I am ready to dump a huge quantity of money into a primary. Are you ready for a primary challenge? And I think that is going to be his leverage. We'll see if it actually works. And I think whether it works partly depends on what Donald Trump decides to do. Does he run as this kind of ultra MAGA guy that he presented, or does he try to move to the center?
But I also wonder if Elon Musk loses interest in this in a few months or in a few years.
I mean, that is I think there's a conventional wisdom that says
he's got a lot on his plate.
He's got a attention span that drifts easily. He's got all these companies. He spends hours a day playing video games. He's got a lot going on. So if this started to
got a lot of kids.
Yeah, he's got a lot of kids. Many interests.
A lot of wives, a lot of former wives.
What I'll say is though, this is a really great opportunity for him as a government contractor, as somebody who does a lot of things having to do with the government to have influence. So I think he's going to ride this train as long as it'll go. And I think he does have levers that he can pull that will make it harder for Donald Trump to push him away than, say, it was to be able to push away these other sort of business leaders who got close to Trump the last time around. He's not... he has a lot more ways to influence Trump than, say, Anthony Scaramucci, who famously lasted 10 days as the press secretary.
Max, one thing I'm curious about, all that spending that Elon Musk did on this campaign, I mean, it wasn't just a case of just throwing money. I mean, he was involved in creating, hiring companies, getting people to do it. It was a whole new different way of campaigning for a candidate.
Yes, super unusual. So you're talking about really big money. You said 132 million. I think when all said and done, it's going to be closer to 200 million. So kind of up there with the biggest contributions of any donor. And then this approach that is really different from any other mega donor. The Sheldon Adelson was just writing big checks and staying behind the scenes. That's kind of the model. Elon Musk, as you said, front and center. He made Donald Trump and sort of Trumpism the editorial focus of X, his social network. He was on the campaign trail. He's tweeting nonstop. He brings things to this that are unquantifiable and that are probably worth more than the 200 million he put in.
Hey, one thing I want to talk about is the platform X. And, we talked in the 2 years that he's owned it, there have been valuation write-downs by Fidelity, for example. How should we be looking at the valuation of X, or how should we be looking at X as sort of a platform arm of the Republican Party, or communications arm?
Well, it's both a business and it's a loss leader media arm for the Elon Inc. conglomerate, right? Those are the two things, those are the two functions it serves. As a business, it hasn't gone super well. As you said, Fidelity has written down the value massively. Elon Musk, essentially taking it over, decided he didn't care about advertising. He decided that, he was going to be okay with not having a vibrant advertising business. He literally told advertisers to F off, from the stage of a major conference. And what he's done is sort of accepted that this is going to be a less successful business, but try to maintain its influence and maybe even intensify it. And I'd argue in that way, it's been a huge success. It's been a huge success as a political play, and even as a community. It may not be super vibrant in the way it was before. There are a lot of journalists who are, currently leaving to go to Blue Sky or Threads or these competing social networks. They're growing very quickly. But among conservatives, among that kind of base that elected Donald Trump, they are on X. This is where they are getting their news right now.
All right, going to leave it there. Hey, Max, as always, thank you. Max Chafkin, columnist at Bloomberg Businessweek.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Yeah, let's take a look at shares of Plug Power, the green hydrogen company. They're higher today. At one point, Carol, by nearly 10%. This after shares fell yesterday after the company cut its revenue guidance for the full year and missed the average analyst estimate. We've got back with us Andy Marsh, president and CEO over at Plug Power, joining us from Plug's annual symposium event just outside of Albany, New York. Andy, always good to check in with you. Welcome back to the program. First, we got to go there. I'm wondering how you're looking at the Trump administration, the second Trump administration, given that Elon Musk is so close to him, obviously a proponent of EVs. What does having Elon so close to Trump mean for hydrogen and for Plug Power?
Oh, Tim, I don't get too excited about this, Tommy. I've been watching political elections since I was a kid in 1968, and things are always extreme at the beginning. I think the real question is, think a little bit about what Exxon CEO said yesterday, where he said that the Trump administration should be thoughtful about their clean energy policies. And we had two analysts here at our Plug Symposium today. one Republican, one Democrat. They'll tell you, I think the feeling across the board is that small nuclear, hydrogen, sustainable aviation fuel with biofuels, are in pretty good shape compared to other technologies. And look, if you look at my electrolyzer business, 95% of it's outside the United States, and that's my biggest growth opportunity. I had one customer who flew 45 hours from Australia to present today. So I don't get too excited about those things.
I will say, though, Andy, there was some disappointment about your forecast. But I do believe, you guys came out and said, you're still making progress. Canaccord Adams, they did lower their price target a little bit on the stock. What can you tell us about the outlook and give us a little bit more insight into how things are going?
Well, I think that if you take a look around the world, I think there's a couple drivers. One, we're working on deals which are, overall for people, $5 to $7 billion type projects. And we were overly optimistic about how fast projects like that could come to fruition. That being said, they're actually paying us to do the work now to prepare to do those deployments. And look, regulations haven't moved as fast anywhere around the world. It's tough to get regulations in place. But they're moving. We see, as I mentioned, see great progress in Europe. Actually see progress here in the United States. So, we've also, it's been a bit of a haul here, Carol, and we've become a little bit more conservative in how we forecast the future.
Understood, and respect. Andy, one thing though, do you think a Trump administration and any expectations around policies that impact your business will be positive or negative?
That's really an interesting question. One of the items which we've struggled with the IRA is the production tax credit for hydrogen. And we believe, and we've been pretty clear about, we think that the regulations that were initially written included concepts of 3 pillars for the hydrogen economy, which was nowhere in the legislation. We think the Trump administration will probably be more in gear with the recent Loper decision by the Supreme Court, and where congressional intent and how it's implemented in regulations will be more aligned. Look, I'm not naive either, too. I don't expect a lot of new programs for hydrogen, but we'll do quite well if the old programs are implemented the way Congress intended.
Hey, Andy, I'm wondering about the Inflation Reduction Act and what that's meant for your business, and to what extent you could see parts of it rolled back, and how that would affect your business when Trump takes office in January.
So, I have a lobbyist who spoke here today at the symposium, who sat on the Republicans' House Ways and Means, runs a tax plan. He does not expect that. He expects the rollback will be on things like offshore wind. And look, I think 80% of what I do is actually done in red districts and red states. I have a large contingent of folks in Houston looking to build a large hydrogen plant in Texas. I have a hydrogen plant operating in Georgia and Tennessee. Most of my customers are in red states. And so, I think Congress still matters. And, I think John Thune being Senate Majority Leader is a sign that, activities won't be extreme one way or another. I think there'll be a balanced approach. Look, I think, as folks mentioned, I think the mantra is all of the above, and what we do is all of the above. And look, if we don't do it here in the United States, they're going to do it in China. And certainly a Trump administration doesn't want it done in China.
Andy, how much pressure are you feeling from the investment community? I mean, your stock's down about 56% year to date. About 25, almost a 1/4% of the float is shorted. It's a $2 stock. I'm just curious what kind of pressure you are feeling from investors at this point.
Yeah, so Plug has 31 analysts. I had 20 of them here today. Actually, the short position is probably larger than that, Carol. It's probably 37%. And I think a lot of folks believe that as we continue making progress, there's a large opportunity for a huge short squeeze. So, I think our investors want to see it happen. I spoke with a lot of them here today.
But you want to be more than a short squeeze, right, to investors. You want to be to investors a fundamental play, no?
Yeah, I would say this, Carol. We do want to be a fundamental play, and I think the shorts have had a lot of control of the stock, and if we are a fundamental play, the stock will do just fine.
All right.
Good question.
I guess. Wait, sorry. Can you go ahead?
No, go ahead, Tim. No, please go ahead.
Hey,
Tim.
I want to know about production of hydrogen and how you're able to you do it in a way that's not too energy intensive, because that's one thing that we talk about a lot. When you're actually producing this, a lot of energy is used. So yes, it is sort of we people call it a green solution, but it still uses a lot of energy.
It uses a lot of energy, but it also creates a lot of energy too, Tim. So let me tell you where I think hydrogen will really see, and you're seeing already, is in applications today where hydrogen is used in oil refinery, in concrete manufacturing, in ammonia production. Where it will be used at first is in substitution. Okay. And ultimately, what we focus on is improving the efficiency of electrolyzers. And you can get to the point where, you're never going to be at the point where energy in equals energy out, but you can get to a point where it's far superior to even today. It's if you think about the full life cycle, it's superior to natural gas turbines. I'm not, but that is a big focus of the company.
All right, Andy Marsh, we're going to leave it there. President and CEO over at Plug Power, joining us just outside Albany, New York.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 16 minutes left in today's trading session, bouncing around a little bit more of a muted trade, certainly on the equity side of things. But let's get to it. We did get an inflation read earlier this morning. Back with us is Doug Ciocca, CEO and partner at Kavar Capital. They've got about $1.5 billion in assets under management, joining us from his alma mater, Notre Dame. Doug, good to have you back with us. How are you?
Hey, I am great. Thank you for having me on, and great to be back.
Well, it's great to have you here. Nothing's going on. Quiet as could be. The election, the outcome, I don't know. How does it change your thinking about the investment environment and what's to come? Or is it just really too soon to tell? But we are getting a lot on his cabinet, nominees and key advisor nominees. So I don't know if that starts to paint a picture of maybe what's to come.
Yeah, I mean, I think the one thing that certainly helps is we've had 4 years of President Trump before. So, we're going through and experiencing kind of like the old expression of history may not repeat itself, but it often rhymes. So we're having a lot of conversations about like the devilish impact of tariffs and trade war 2.0 and what does this really mean for the yield curve? And I think it's early, right? There are in politics promises versus policy, and somewhere between the two will actually lie the outcome of what will transpire. So yeah, I think, look, the momentum that's in place that's celebrating what is purported to be very much a free trade, emphasizing low regulation, low tax platform, it likely will be hard to stop that going into year end, which is seasonally pretty strong anyway. But I do think there are going to be a lot of opportunities that emerge without question.
What kind of opportunities?
So right now, I think, more than anything, like we think that's happening in the fixed income markets is really fascinating. I mean, everyone's talking about the yield curve. Oh my God, how can it possibly see like some lift in the long end after the Fed has now cut 75 basis points in 2 consecutive meetings? You realize that this is the third time in the last 5 cut undertakings that a month later, the curve is either flat or a little higher, right? And it makes a ton of sense to us to think about term premium steepens is to reflect the fact that there's an incipient risk of inflation because the Fed is cutting. GOP is still strong. Normalization is validating a labor market that is back in balance. Inflation is under control, as we saw this morning, though not careening lower, and the dollar is strong. So we think this is a very positive transformation away from some pretty steep inversion of normalization where we can actually pick up yield to make little longer loans. So we're really happy what's happening in the fixed income market.
Wait, so what's the specific play then right now?
Yeah, excuse me. I think the play is in the belly of the curve. And I think the play is in credit. And I think the play is going to be, because what happened right in the muni market, which just kept such a bid in those bonds throughout the year, in spite of a really ho-hum performance by the ag, is that, and this is going to be like, this is a mind-boggling idea, right? Local governments and municipalities actually have to balance their budget. So there's a lot of terming out that had taken place. There's not a lot of paper that's come to market because some of these treasurers of these municipalities exhibited very strong foresight in locking in lower rates for a longer period of time. Corporations not as much, governments not as much. So we're seeing that 5 to 7 year period in the curve very attractive to us. You clip a lot of coupons. Oh, and if you do get a tailwind from consecutive Fed cuts, even if they're not going to be as much or as big as people thought a year ago, that's going to actually give a nice contribution to the total return of yield plus appreciation.
Any inflationary risks when it comes to Trump's agenda? Tariffs, we're going to be speaking about those. We're going to be speaking about those a little later.
Yeah, I no question, right? I mean, I think that is an issue. And again, you've got to go back and say, okay, in trade war 1.0, how much of an impact did that have on CPI? Forget PCE for a sec. Very little, right? So really, if you go back 2018 and 19 during trade war 1.0, you saw CPI remain pretty stable at almost exactly the Fed targeted 2%. Now, you have to take into consideration the backdrop's a little bit different then, right? You had global demand for manufactured goods was a little bit weaker. Slowing trade had already begun to take place, which is not the case right now. But you got to keep in mind the changing transformation and composition of the U.S. economy. Spending on services right now is 66% and goods 33%. So much of the tariffs that people are fearful are going to be passed on to a tax consumer. It's just not impacting as much of their pocketbook as it did 3, 5, 7 years ago.
What's going on? It's crazy, right?
It's nuts. I mean, yeah, everything's coming fast and furious. Doug, thanks for joining us. Always good to check in with you. Sorry I was cut a little short. We had a lot of breaking news today.
We did.
Definitely appreciate you taking the time. Doug Ciocca, CEO and partner over at Kavar Capital Partners.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.